Good day, and welcome to Globant's third quarter 2024 earnings conference call. I am Arturo Langa, Investor Relations Officer at Globant. All participants on this call will be on listen-only mode. After today's presentation, there will be an opportunity to ask questions. Kindly refrain from raising hands as we'll aim to address a select number of questions to ensure efficiency. Please note this event is being recorded and streamed live on YouTube. By now, you should have received a copy of the earnings release. If you have not, a copy is available on our website, investors.globant.com. Our speakers today are Martín Migoya, Co-founder and Chief Executive Officer, Juan Urteague, Chief Financial Officer, Patricia Pomies, Chief Operating Officer, and Diego Tartara, Global Chief Technology Officer. Before we begin, I would like to remind you that some of our comments on our call today may be deemed forward-looking statements. This includes our business and financial outlook and the answers to some of your questions. Such statements are subject to risk and uncertainties as described in the company's earnings release and other filings with the SEC. Please note that we follow IFRS accounting rules in our financial statements. During our call today, we will report non-IFRS or adjusted measures, which is how we track performance internally and the easiest way to compare Globant to our peers in the industry. You will find a reconciliation of IFRS and non-IFRS measures at the end of the press release we published on our Investor Relations website announcing this quarter's results. I'd now like to turn the call over to Martín Migoya, our CEO.
Good afternoon, everyone. It is great to be back with all of you, and I'm really pleased to share that Globant has had another strong quarter. We have seen top-line growth, better margins, increased profitability. I look forward to sharing our results with you. This quarter, we brought in $614.7 million in revenue. That's a 4.6% growth from the last quarter and 12.7% more than the same time last year. We see strong demand in our main sectors with our top clients and across different regions. We're growing our market share everywhere. For 2024, we're expecting the highest growth of any major IT service provider with an estimated of 15% increase in revenue. Our bookings are solid with two of the biggest in our company's history secured in the last 6 months. For 2025, we're confident about double-digit revenue growth thanks to a strong pipeline and faster organic growth. As I mentioned during our last earnings call, AI is being adopted massively by our customers. They're using AI tools both personally and professionally. It is the biggest breakthrough since smartphones. As AI evolves, customers want more. Companies and governments need to keep up with these enhanced digital products. Last year, companies spent $15 billion on generative AI solutions. McKinsey predicts that spending could reach $175 billion to $250 billion by 2027. At Globant, we're already capturing this opportunity. In the first 9 months of 2024, AI-related work generated over $250 million in revenue, up 120% from the same period last year. This growth is partially due to our AI-powered tools like Augur, Magnify, and GeneXus. With Globant Enterprise AI, we can generate agentic workflows to automate processes in every industry. At the same time, it can be a portal to connect to any LLM to both optimize costs or find the best possible answer between those LLMs. These tools speed up software development and improve the quality and security of the final products. Our clients are benefiting from these productivity gains. Recently, we helped a leading bank to transform their COBOL-based system into Java microservices. In just 105 hours, we modernized over 11,000 lines of legacy code, reducing it to nearly 5,000 lines of a state-of-the-art architecture. We aim to expand our leadership as this business grows. Some analysts predict AI applications could add over $1.5 trillion to global GDP by boosting productivity by up to 30%. Organizations need sophisticated consultancy for AI adoption. 3 years ago, we established our AI reinvention studios to meet this demand. We now have studios for 15 industries with strong growth in airlines, finance, and connected experiences. For example, phygital technologies are enhancing the fan experience at live events. people expect more from their favorite artists or sport teams. This is evident in our partnership with the LA Clippers. Their new stadium, the Intuit Dome, is now open and offers the most advanced fan experience in the world. Fans can enter the arena and buy food and merchandise using facial recognition, which means shorter lines. Our AI technology powers some interactive promotional experiences, allowing fans to participate directly from their seats. It is the first time such technologies are used in a stadium this size. We are excited to bring this concept to more stadiums globally. The Intuit Dome also houses our newest office, keeping us close to our clients. It is just steps away from the basketball court. We're also working on groundbreaking projects in the Middle East, our newest business region. We have partnered with Qiddiya Investment Company to develop the Play Life Connected experience at Qiddiya City. It will be a state-of-the-art digital ecosystem, a global destination for entertainment, sports, and culture focused on the art of play. Play Life Connected experiences will offer visitors a seamless, personalized interface to book events and manage itineraries with real-time updates and recommendations. We're growing in our established markets too. In Europe, our fastest growing region in revenue this year, we have opened new offices in Madrid and Milan. These offices will host AI innovation hubs, with Milan becoming our headquarters in Italy. Regarding M&A, we want to be a growth vehicle for ambitious entrepreneurs. We offer a unique startup culture valuing transparency and autonomy over corporate bureaucracy. In the US, we recently acquired Blank Factor, a specialist in financial services. We're excited to integrate their expertise in payments, banking, and capital markets. They work with 6 of the top 10 payment processors and major banks. Finally, I invite you to our annual Converge event. This year's theme is AI Disrupt, Delight, Connect. It is on November 21st, featuring speakers like Gwyneth Paltrow of Goop, Marcos Galperin of Mercado Libre, and Chris Young of Microsoft. You can register via the QR code on the screen. Now, I hand it over to Diego for more on our technology focus. Thank you very much. Diego, please.
Thank you, Martin. For organizations to fully adopt artificial intelligence, they must integrate it into their products, strategies, and cultures. To explore AI's impact on software development, we collaborated with the Massachusetts Institute of Technology for their publication, MIT Technology Review Insights. Findings reveal that while generative AI is modernizing processes, its most significant impact is still forthcoming. Currently, only 20% of respondents consider it a well-integrated part of their software development lifecycle. You can access the full report through the link on the screen. AI agents represent a new frontier, transforming software creation. We are utilizing these agents throughout the entire development cycle, from product definition to back-end prototyping and application design, including BA agents and code fixer agents. Our studio networks are central to these innovations. We are excited to announce the launch of the Digital Twin Studio within our digital network. This studio aims to enhance design and operations by creating digital twins that simulate and analyze physical processes in real time, thereby streamlining decision-making. Additionally, we've introduced the Legal AI Studio, focusing on providing tailor-made technology and AI tools for corporate legal teams, law firms, and public administrations. AI enhances efficiency and accuracy across various legal processes, from data management to intellectual property protection, facilitating digital transformation in the legal sector. Globant is committed to helping leading brands enhance their customer experiences. Our partnership with Formula One is progressing well, similar to our collaboration with FIFA. In addition to innovating race technology and fan experiences, Formula One offers a significant platform for elevating our brand recognition. Regarding our client work, we are collaborating with Topgolf Callaway to drive strategic transformation for Callaway Golf. Utilizing our Magnify platform and generative AI accelerators, we are enhancing productivity and efficiency in quality assurance. Our Globant Gut network is also making waves globally. In the Netherlands, Gut suggested that Kraft Heinz innovate their iconic product by creating Hagelchup, the first sprinkleable ketchup inspired by Hagelslag. This agile initiative utilized earned media and organic buzz, generating excitement with a limited supply and a pop-up in Amsterdam. Moreover, we were selected by Stellantis and you to run a digital transformation program across their dealer network in Europe. Our focus is on simplifying processes and automating operations to improve efficiency and reduce costs. Our expertise in the automotive sector and our technology stack, including Globant X tools, were key to our selection. This quarter, within the Enterprise Studio Network, we launched a new product in partnership with QuickPlay, enhancing our advanced video search tool developed with Google. This product enriches and tags extensive content, enabling creators and broadcasters to craft dynamic, personalized channels. Lastly, I invite you to explore our new website, featuring an interactive AI assistant that guides you through Globant services, showcasing how we can elevate your organization. With that, I will hand it over to Patricia Pomis, our COO. I look forward to seeing you at the Q&A session shortly. Thank you.
Thank you, Diego. Globant's growth continues to thrive thanks to our commitment to quality and the strong relationships we've built with clients over the years. Currently, we have 21 clients generating over $20 million in annual revenue and 331 clients contributing more than $1 million annually. Notably, revenue from our largest client, the Walt Disney Company, increased by 17.5% year-over-year and 14% quarter-over-quarter. Our strongest growth this quarter came from new markets in the Middle East and APAC, with a remarkable 35.3% sequential growth and 53.1% year-over-year. We are optimistic about the prospects in this region. Year-over-year, our revenue growth was 24.8% in Europe, 13.9% in Latin America, and 6.6% in North America. As our revenue diversifies, North America accounts for 55.7% of our top line, followed by Latin America at 21.8%, Europe at 17.6%, and the Middle East and APAC at 4.9%. This quarter, 7 out of 8 industry verticals experienced sequential growth, reflecting a broadening of our business. Key growth areas included travel and hospitality, 11.1%, media and entertainment, 6.3%, BFSI, 3.7%, and consumer, retail, and manufacturing, 2.7%. We're also pleased to report growth in the technology and telecommunications and professional services verticals, which posted sequential growth of 5.2% and 1.6% respectively. As of Q3, our total headcount stands at 29,998 Globers, a 9.1% increase year-over-year, with 27,927 being IT professionals. Our utilization rate is currently at 79.8%, showing a slight increase, and our attrition rate has decreased to 9%, down from 9.5% in Q3 2023. To sustain Globant's growth trajectory, we are continually assessing how to better support our teams, enhancing their effectiveness and creativity for clients. As Martín mentioned, our clients' need for industry-specific consultancy has provided an opportunity to empower our studios. We aim to blend creativity with industry-specific knowledge, ensuring our teams can deliver applicable expertise. Consequently, our local portfolios will now feature more industry experts, irrespective of geography. Our AI reinvention studios are now crucial, contributing over 20% of the company's revenue and marking one of the fastest growth areas for us. The combination of industry specialization with relevant AI technology has enabled our success in consultancy during challenging times for major players. Applying AI in a smart way, focusing on critical processes, is key both for us and our clients. With that in mind, we are incorporating AI agents into our delivery process to optimize quality and speed. They take on different tasks alongside our delivery managers as they define and onboard the team, execute the delivery, and monitor the overall project status. We are adapting our structure to facilitate quicker local decision-making. Latin America has been subdivided into 2 regions to strengthen our focus in Mexico and Brazil. Additionally, to support our growing business in the Middle East, we will open a new office in Riyadh for transformational projects like Qiddiya. Globant's commitment to community work is gaining recognition. We ranked 6th on Fortune's 2024 Change the World list, noted for our sustainability initiatives. Projects like Coricancha in Peru helped prevent the release of 12,000 tons of CO2 equivalents. And our green energy farming project in India improved the quality of life for over 6,500 beneficiaries while preventing 10 tons of wood from deforestation. In October, we were honored as the Company of the Decade by the Council of the Americas for our global growth and commitment to developing local communities, particularly in emerging markets. We hope this recognition inspires more companies in Latin America to dream big and expand globally. Our Women That Build initiative has successfully completed its 5th edition. Since 2020, we've evaluated over 6,500 candidates, partnered with 270 judges globally, and collaborated with organizations like Aon, AWS, and KPMG. We proudly recognize trailblazing women from 12 regions with 3 global winners, reinforcing our commitment to narrowing the gender gap in the industry and fostering inclusive growth. Thank you all for your time. I will now hand it over to Juan to discuss our financials.
Thank you, Pato, and good afternoon, everyone. I am pleased to be here with you today to discuss our third quarter results. During this period, we achieved strong sequential revenue growth, driven by robust performance from our top client and several key accounts, along with recent new wins across different geographies and verticals. We managed to grow our business while enhancing profitability and generating free cash flow, all while maintaining a prudent and healthy balance sheet. Our revenues reached a record level of $614.7 million, up 12.7% year-over-year and 4.6% sequentially, in line with our guidance. Excluding the negative impact of foreign exchange, revenue growth stood at 13.7% year-over-year. We estimate a 9% year-on-year revenue growth in organic constant currency terms for Q3. Additionally, from a quarter-on-quarter growth perspective, we are experiencing initial signs of recovery in specific verticals that faced headwinds in the first half of the year. Q3 also experienced a robust growth in our top account. We had a strong quarter from the profitability perspective. We closed Q3 with an adjusted gross profit margin of 38.5%, up 40 basis points sequentially and 30 basis points year-over-year. Our adjusted operating margin reached 15.6%, reflecting an increase of 50 basis points sequentially and 30 basis points year-over-year. These margins are the highest recorded over the past 2 years. In addition, this quarter we managed to dilute SG&A by 20 basis points sequentially. Our effective tax rate stood at 20% for the quarter, resulting in an adjusted net income of $72.4 million, with an 11.8% adjusted net profit margin, up 40 basis points sequentially. Adjusted diluted EPS was $1.63, up 10.1% year-over-year. Our balance sheet remains strong, ending the quarter with $213.5 million in cash and short-term investments, or $27.2 million in net cash. With $165 million drawn from our $725 million revolving credit facility, we have ample liquidity to support our growth initiatives. During the third quarter, we generated $69.7 million of free cash flow versus $60.6 million in the same period last year, achieving a free cash flow to adjusted net income ratio exceeding 96%. As always, our free cash flow generation is much stronger in the second half of the year. Now let's discuss guidance. In organic constant currency terms, we continue to expect growth of close to 10% for the full year 2024. We project Q4 2024 revenues in the range of $642 million to $648 million, representing an 11.1% year-over-year increase at the midpoint of the range, with adjusted operating margins between 15% and 16%. The IFRS effective income tax rate is expected to be in the 20% to 22% range. Adjusted EPS for the fourth quarter is now expected to be between $1.71 to $1.75, assuming an average of 44.7 million diluted shares. For the full year, we are raising the lower end of our prior guidance, which is now estimated to range from $2,415 million to $2,421 million. We now forecast 80 basis points of FX headwind in our full year guidance, as currencies in Latin America continue to depreciate against the dollar. We anticipate adjusted operating margins in the range of 15% to 15.5%. The 2024 IFRS effective income tax rate is expected to be in the 20% to 22% range. Finally, our adjusted EPS is expected to be between $6.37 to $6.43, assuming an average of 44.5 million diluted shares outstanding for the year. To conclude, we are very pleased with our year-to-date financial performance, which reflects our unique position in the industry. Our leading indicators remain positive, reinforcing a strong end to the year and setting a solid start to 2025, with organic growth showing signs of improving relative to 2024. Thank you for your continued support, and we look forward to sharing more updates on our growth and achievements in the coming months.
Thank you, Juan, and hi, everyone. It's good to see you again. Unfortunately, Martin will not be able to join us today. He was stuck on a flight delay. So with that in mind, I will call your name, and then I will please ask you to unmute your line and ask your question. After your question is done, please mute your line. And we also like for you to limit yourself to one question, please, to give everybody a chance to ask. With that in mind, the first question comes from the line of Tien-Tsin Huang from JP Morgan. Tien-Tsin, please go ahead.
Hi, Arturo. Thank you. So, yeah, I'll ask on the visibility on the faster organic growth for next year. I think both Martin and then Juan, you just mentioned there's some signs of that. How much of that is driven by the large backlog that you have versus maybe what the macro is telling you, or even what the larger clients are perhaps telling you? I'd love just a little bit more insight on that statement of faster organic growth.
Okay, thank you, Tien-Tsin. Good morning, good afternoon, everyone, depending on where you are. Look, what we're seeing about 2025, I think is a reflection of the performance of some of the large deals that we are ramping up, some of the deals that we are closing in the Middle East. There is also a component of a strong performance in our top account and in media and entertainment in general, including sports as well. And finally, I would also add that there is some kind of an acceleration in the number of deals that are AI related or with AI components. That's the majority of the improvement that we are seeing, that we've been seeing over the last few months. There is some, of course, also some macro things that are getting more clear now. We now have the elections behind. We have interest rates coming down. Inflation is under control. So I think that on the macro front, some of the variables that were making some noise are starting to clear. But I would mainly assign the visibility to the first few points that I mentioned before.
Thank you, Tien-Tsin. The next question comes from the line of Jim Schneider from Goldman Sachs. Jim, please go ahead.
Good afternoon. Thanks for taking my question. Relative to the work you talked about in AI and the acceleration you're expecting for next year, how do you see your work for clients changing into 2025? Is there a greater emphasis on certain practice areas like data? And are you seeing the AI projects getting larger in size or scope or not? Thank you.
I will take that one. Thank you for your question. What we've seen, and it's compared to last year, to 2023, is there's definitely a different approach into incorporating AI within companies. Last year, there was a lot of the work that was exploratory, analyzing, the technology, getting a deep dive into it, assessing impact in many different places. So typical booking was very small. The pipeline compared to the work we were executing was actually very small because it started as POC and that get extended and extended. What we've seen this year in comparison, like I said, with last year, is that the work is much more intentional. So there's an end goal we need to reach. So, and that's why we see bigger pipeline. There's a mission. That mission has to provide an enterprise and business result. And as a result of that, the type of work mandates we have a different level of maturity. There's a good balance. Last year, there was an imbalance between Gen AI and traditional and other models, And this year is about producing impact. Gen AI when it makes sense, traditional other models and in some optimizations, etc. So what I'm foreseeing for 2025 is a continuity of this line. So I think investments are now much more directed, like they have an objective. AI is definitely factor into the forecasting of every company as results that it needs to bring, and that gives us more visibility on what's coming, larger projects, etc. So overall, that's the visibility we have.
Thank you, Jim. The next question comes from the line of Brian Bergen from TD Cowen. Brian, please go ahead.
Hey guys, thank you. Good afternoon. So I wanted to actually ask the Middle East. Can you just talk about the potential of this region for you? We saw the deal announcement a week ago, making it official there on that project. Just in the context of kind of the historically larger deals that you have had, how can these potentially compare?
Yeah, so I'll take that one. So Brian, we are starting from a very small base, so it's easy to see growth over the coming quarters. Typically, the size of the deals is large. They begin small, but they become large very quick. As you know, in that region, every project tends to be magnificent, like very, very large, including massive investments in real estate, massive investments in technology. They are trying basically to create new experiences and to attract people from Asia and from other regions to visit those countries, to visit those new locations. And as they are starting from zero, in many cases, they are starting from basically from nothing. There is a lot to be built. That's going to take time. It's going to be an evolution. There was going to be an evolution. They're going to start with certain assets, then you're going to keep on expanding. But, it's one of these, we've been talking about this for a few quarters. It's one of these regions that is moving, with a different economy or with a different macro, right? There is a lot of money that they want to invest. They're trying to diversify the sources of income of their economies. And a lot of it is related to experience, to creating an experience. Globant, I think, is extremely well positioned to build software on that area. And, we are seeing very good traction in many of the deals over there, including, of course, the one that was announced a couple of weeks ago.
And adding to that, I think that it's interesting to say that we just opened an office there. So we are still putting people there, training people, helping in order to achieve those goals and growing in new markets area. I think it's very interesting for us. It's a new market, as Juan was mentioning. So we are still designing with the region. All the strategy there. And opening an office, of course, was one part of the strategy. I think that is going to continue growing, and at least that is what we are planning. But of course, as many other markets in Globant, you know that we have many other markets also. We are taking care, we're putting in a specific team there with a specialist and trying to be very close to our clients.
Thank you, Brian. The next question comes from the line of Maggie Nolan from William Blair. Maggie, your line is open.
Thank you. I was interested in the commentary about incorporating AI agents into the delivery process. Is this IP that you have? Is it unique in the services industry? And then to what degree, if any, is this replacing human labor, and how do you factor that into the economics of the engagement?
Well, I take that one. Thank you, Maggie, for your question. It's not that we are replacing people, it's more that, as we have been mentioning in the last quarter, we have been using AI for the last 10 years in different kind of processes internal in Globant, in the way we are recruiting people, in the way we are training people. And now in the delivery framework, it has to do with using agents in order to work with our delivery people, with the engagement partners, in order to try to or define scope or help